August of 2008. Danny is staring at a euro-dollar chart, and in about 40 minutes, his account is down 80%. He never once asked why he was even allowed to place that trade in the first place. Because 40 years earlier, nobody like him could have placed it at all. That is where this real story starts. And it explains everything about the platform you are trading on right now. Danny's blow-up happened on a currency pair, but the story of why that pair even trades on a screen starts way earlier, in 1971. Up until then, currencies were pinned to fixed rates, tied back to gold through the US dollar, under a system called Bretton Woods. Then President Nixon ends the gold link. The fixed system collapses, and currencies are set loose to float against each other based on supply and demand. That one decision is the actual birth certificate of currency speculation, the moment a price could move enough, day to day, for someone to try to profit from the move itself. But for the next 20 years, almost nobody could actually do that. Here's why. Pause for a second and guess. In the 1980s, what's the smallest amount a bank would even discuss a currency trade for? Most people guess a few $1,000s. It was closer to $1 million. That's barrier 1, capital. Barrier 2, no charts, no software. Trades went by phone or telex, a typed message machine, with a banker deciding if you were worth the call. Barrier 3, there was no product built for an individual at all. Unless you were a bank, a hedge fund, or a multinational moving real goods across borders, this market simply did not exist for you. That's the club Danny would have been locked out of, decades before he ever opened an account. So what actually broke the bank's only club open? The internet. Through the 1990s, as home internet spread, banks and new brokerage firms realized they could build software that let a screen do what a banker on a phone used to do, quote a price, take an order, show a chart. But quoting the price to the public was only half the fix. Interbank trades were sized in millions. So retail brokers invented smaller contract sizes, what the industry calls lot sizes, micro and mini lots, that let someone trade with a few $100s instead of a few million. That single change is why Danny or you could fund an account and place a trade within a weekend. Remember, context beats the pattern. The stop is what saves you, and nothing replaces practice on a live chart.